When could we see 12 to 13,000? I'm looking at 2 to 3 months out if this 30,000 line gets rejected and we see price start coming back in. All right, so 2 to 3 months out, 12 to 13,000, and then likely 6 to 8 months out before we could see that 9,000, 10,000 target if it does. Basically, if we break that 15,000 low, then I actually do think 9,000 is the likely culprit here.
In a recent video, Gareth Soloway, a renowned entrepreneur, investor, and trader, provided his expert analysis on the Federal Reserve's decision, which resulted in a surge in the prices of gold and Bitcoin. Federal Reserve Chair Jerome Powell has stated that it is still too early to determine the impact of the banking crisis. However, he believes that a path towards a soft landing still exists. Although the Fed may either maintain or increase its current rates, it is highly likely that it will raise rates by its May 2023 meeting to control inflation, which has surged to 6% as of February compared to the previous year. During his announcement, Powell warned of the potential for a credit crunch due to the stress in the banking industry, which could have significant implications for the economy. Despite the initial rise in the markets after the Fed's announcement of a quarter-point rate hike, they later wavered following Powell's statement that it is unlikely that the Fed will cut rates this year. Powell emphasized the need for the strengthening of supervision and regulation of the financial sector. Soloway's analysis provides valuable insights into the impact of the Fed's decision on the financial industry, particularly on the prices of gold and Bitcoin. Recently, Gareth Soloway tweeted that with the Federal Reserve hiking by 25 baps and saying they won't lower rates this year into next, with a recession talk which I have slated to hit in the second half of 2023. Before proceeding further in this video, make sure to click on the subscribe button below to stay updated with our latest content.
Right now, the markets are pricing in about an 85% chance of a 25 basis point rate hike. I think that's exactly what they're going to do. I'm going to explain real quickly, give you guys the rundown of why you're likely going to see 25 basis points. Okay, go back, rewind. 2 weeks ago, in fact, 2 weeks ago today, Jerome Powell was in front of Congress. We had just gotten out data that was inflationary, and he basically said to Congress, listen, we may have to go 50 basis points. After that, we saw the banking markets collapse, right? We saw the banks like Credit Suisse, SVB, SBNY, all of these banks collapse. Stock prices of all these banks collapsing as well. I mean, take a look at FRC recently, down huge from the all-time or even 52-week highs. So the bottom line is that the Fed was put in a pickle here. They don't want to go to zero right now because there still is, number one, inflation. Number two, if they go to zero, right? If they go to zero interest rates, the markets are going to cue off of that things are a lot worse in the banking sector, that things are very, very chaotic, that there's a potential catastrophic black swan event coming. And so ultimately, what the Fed will do is probably thread the needle with a 25 basis point. This way, they don't really raise much, but they raise just enough to kind of keep confidence that they're in control and that we're not looking at a major banking collapse that's even greater than what we've done. All right.
Gareth Soloway has observed that the recent gain in the prices of gold and Bitcoin is a reflection of the growing trust and confidence in these currencies, leading to increased investments in the financial system. The Federal Reserve meeting is expected to result in a quarter-point rate hike, which Soloway believes will help the Fed to maintain its credibility. He predicts that investors will further turn towards cryptocurrencies after the hike, leading to a further increase in their prices. According to the latest crypto price oracles, Bitcoin has reached a 9-month high of around $28.4 thousand, and it is expected to continue its upward trend towards $30,000 and beyond in the near term. However, there is also a possibility that the gap may be left unfilled as the Bitcoin market rallies further.
So when I look at Bitcoin, Bitcoin has continued to chop sideways over the last couple days, ever since it tested the 28,500 resistance. And by the way, why is that resistance? All right, because it is the lowest point. Check this out, guys. 28,500, which is the high that we just hit over the last couple days. It is the low pivot of the mid-bull cycle of 2021. We're at a pivotal level going into this Fed announcement. If we see a pop on Bitcoin, there's a major level right up here. This is the big one at 30,000, even numbers. If you're a technician and you know charting, you know that even numbers matter in charts because they matter to our human psyche. Naturally, up here, guys, up here in our brains, we are drawn to even numbers. All right, we don't talk about 23,752.5. We talk about 50,000. We talk about 100,000. We talk about 30,000. We talk about a million. These even numbers on a statistical basis hold weight. So if we see a rally above 28.5, your next resistance is going to be a pierce of 30,000. For me, I'm going to be looking to inch in some more on the short side of Bitcoin. I'm in the camp that I play probabilities. Doesn't mean Bitcoin can't break 30,000. Let's keep that in mind. It just means that probabilities are the way I position myself. So I started a little bit of a short position at 28,450, right around 28.5, and I'll add to it at 30 and change, a pierce of 30. Now, if we establish ourselves above 30,000 and we stay above for like 7 days or so, and I'm looking for not just a pierce, a close above doesn't mean anything. I want to see a close above. That would be significant to me. The chart has to prove it to me before I believe.
Soloway said by 2024, I would actually say we'll get well above $3,000, maybe $3,500, who expects prices to reach $2,100 by the end of this year. 2024 will be the big year for gold. That's going to be the monster up year. Following the U.S. Federal Reserve's expected 25 basis point interest rate hike, an indication of a potential pause in future rate increases due to the recent financial sector turmoil, gold prices have edged higher. On Wednesday, after the Fed raised interest rates and hinted at a potential pause in borrowing cost increases due to the collapse of 2 U.S. banks, gold prices jumped by 2%. The current state of the banking sector and elevated inflation has contributed to the precious metal reaching $2,000. Gareth Soloway believes that when things get scary out there, investors run to safe havens, and gold is basically one of those major safe havens. According to Soloway, we have seen kind of a flee from the banking system. Money absolutely did move away into gold, and that's definitely one of those fear factor trades that has helped gold go higher.
Even though gold did not have a stellar year, the dollar was up 20%. 20%. And gold was basically flat to negative on the year. That should not happen. All right, in a perfect world where things are equal, if the dollar's up 20%, gold should be down 20%-ish. All right, the fact that you saw gold holding steady, that was barely down on the year, that's telling you big money is buying in. Big money. And we know central banks are buying in. We know that the big money banks are buying in. So what that tells me is that gold continues to be one of my favorite assets for the remainder of this year. Do I think eventually Bitcoin will be my favorite? Yes. You guys know I'm a long-term huge bull on Bitcoin. I just don't trust the rally just yet because, again, probabilities are how I analyze everything that I do. All right, so in terms of resistance, if we go up to the 2075 level, that is now a triple top. Technical analysis tells us that when you have a double top, you're likely to pull back big. So here's your double top. Let's talk technicals here. I want to do some teaching. All right, so let's go into here. Let's see what we got here. Bear with me as I do this. All right, here was your high pivot on gold. Here was your double top. Double tops, you get big pullbacks. All right, now remember this because it will be useful in your future analysis. So here's your pullback off your first high. Here's your double top. Here's your pullback. What technical analysis tells us is that if we hit that level again, you only get a small retrace. You'll get a little bit of a retrace like this, much smaller, and then the breakout likely takes hold. So that's what I'm expecting. I think within the next month or so, we likely hit that triple top, and then we see a pullback, a very small pullback, a check back. Essentially, you're going to get sellers there. People are going to say, oh, it's at resistance again. Let me sell. Smart money's going to buy that pullback, and it's going to blast off to the races. All right.
The recent easing of the dollar index by 0.1% has made bullion less expensive for buyers holding other currencies as U.S. Treasury yields fell. The surge in gold prices may have reduced the enthusiasm for another stock market rally, despite the Federal Reserve nearing its peak interest rate and the possibility of a further weakening of the U.S. dollar. However, there are potential factors at play that could still drive the market forward. The U.S. dollar faced significant losses last week following the collapse of Silicon Valley Bank and Signature Bank. As investors await the Fed's policy announcements, the U.S. dollar index is consolidating its losses.
What's interesting to me about the U.S. dollar here is that you're coming into this Fed decision with technical support, right? So again, if we look at the dollar, it had this 3-bar surge, 1, 2, 3. Then bullish consolidation, sideways consolidation after a 3-bar surge is definitely bullish. We then saw upside in the U.S. dollar. Since the highs here and the banking crisis began, we've seen the dollar start to decline. Interestingly enough, look at where we find ourselves back into going into this Fed decision. So, interestingly enough, does this announcement, does the Fed calm fears about a banking crisis? If the Fed calms, and think about this, right? If the Fed calms the banking fears down, does the dollar bounce? Does the Fed look like they're in control? Does the Fed say that the bleeding has been stemmed or stopped in the banking sector? Does that yield a bounce in the market? If the dollar bounces, does the banking system bounce? Do the bank stocks bounce? But then does technology sell off? Because usually when the dollar bounces, tech sells off. Now, what's fascinating about the last 2 weeks is that tech stocks have been a beneficiary of money flow that's been going out of the bank stocks, right? We've also seen Bitcoin do well. We've seen gold just ripping higher until yesterday's rally in the banking stocks when it really came back in. So we're really looking at, for me at least, when I look at the dollar chart today, number one, it's at a pivotal level. All right, which means that the decision today is either going to bounce it, which is the more likely scenario.
Fed policymakers believe beating back inflation may require just one more interest rate hike this year, but less easing next year than most thought would be appropriate just 3 months ago. That's all about today's analysis. What do you think of Gareth Soloway's predictions for gold and cryptocurrencies performance in 2023? Do you agree with Gareth Soloway's outlook and why? Share your thoughts in the comments section below. If you found this information helpful, please consider giving this video a thumbs up and subscribe to our channel. We look forward to bringing you more updates in the future.